The buzz about the Philippines is getting louder. The Philippines is pushing forward on all fronts. Through good governance reforms, the country now enjoys strong, sustainable growth, a much improved fiscal and debt situation, better infrastructure, and higher credit ratings.
Good governance is good economics. So far, we've been reaping dividends from this agenda in terms of more confidence from the market, more confidence from investors. Local companies have been committing and announcing plans for the next 5 years in unprecedented amounts.
The Philippines stands out as one of the few countries globally that continues to impress with positive news.
Indeed, the Philippines continues to beat market expectations. The Philippines is now one of the best performing economies in Asia.
Strong growth momentum continues despite external challenges.
First 6 months of the year saw the economy growing at 6.1%, which is quite respectable given the growth rates achieved by our peers in the region. The growth exceeds our expectations and the target of 5 to 6% for the year.
A sound and stable inflation environment continues to support economic growth.
The manageable inflation outlook allowed the BSP to take an accommodative monetary policy stance in the first half of the year. We cut policy rates preemptively to help cope with the adverse effects arising from volatilities in the global economy.
The banking sector remains sound and stable and continues to play its role of channeling funds to productive uses.
We adopted macroprudential regulations to ensure that bank practices are aligned with the evolving international best practices. We manage volatilities in financial markets brought about by surges in capital flows.
The buzz about the positive changes in the Philippines is getting louder, and investments are pouring in.
During the first half alone of this year, we had more investors coming in than all of 2011 and all of 2010, which is the first, I think, that it's ever happened in this country. Our exports grew by 7.7% during the first half of this year. And that is despite the slowdown in the world economy. Philippines is doing extremely well in this weak environment. We really have a lot of investments in many sectors. Of course, you have the BPO call center sector, which has continued to grow at over 20% per year. We also got a lot of investments in the power sector to put up new power plants. We got a lot of investments in the consumer sector, including investments from Coke and Nestle. These were very substantial investments. And across the board, even in agriculture, even in shipbuilding, we're getting so many of these investments.
In the fiscal sector, good management is also bearing fruits.
We have been able to generate huge savings in the use of public funds, which allows us to make dramatic investments in the administration's priorities. We have also drastically reduced leakages as well as inefficiencies in the use of public monies. And because of this, we have been able to put in more money in the priorities of this administration.
Higher revenues have enabled the government to narrow its budget deficit, allowing it to improve its debt dynamics and help bring down the cost of borrowing.
The first 6 months have seen us keep our deficit about $2 billion or about 79 billion pesos lower than program, which gives us ample space to pump prime the economy if necessary. This is on the back of higher revenues, with the BIR having an increase of 13.8% over the same period last year, and the Bureau of Customs having an increase of about 11% over last year. Our debt to GDP has continued to drop. Our general debt now is down to 50.5%. This was about 74% as recently as 2004. More importantly, the foreign debt to GDP has gone below 28%. This means that we are less vulnerable from global economic and financial turmoil. We will continue to bring down this foreign debt to GDP ratio. For 2012, our plan is to borrow 75% in the domestic market and only 25% in the foreign markets. Next year, we plan to maintain that ratio.
In other areas of government, good governance and good economics are likewise evident.
Appropriate interventions by the Department of Agriculture, such as the provisions of quality seeds and improvement of the national irrigation systems, have enabled farmers to produce record palay and corn harvests. Barring destructive typhoons during the second semester, we forecast another record harvest of palay for the entire 2012 at 17.8 million metric tons. This would be 1 million tons or 6.7% more than last year's harvest of 16.68 million metric tons. We at the DA remains hopeful that we will achieve rice self-sufficiency by the end of 2013.
But it doesn't stop there. Given the need to build better roads and bridges to facilitate trade, concrete plans continue to be laid out.
As far as the DPWH is concerned, we will continue to focus on upgrading our national roads and bridges. Since we started this program, we have worked on close to 5,000 kilometers of our national roads, meaning we have either upgraded that from gravel to pave, widened these national roads. And in addition, we have worked on something like 16,200 linear meters of our national bridges. But in addition to this, I'd like to mention that we have also a convergence program with the Department of Tourism. And this involves this year 5 billion of investments in tourism infrastructure and 12 billion in 2013 to support tourism master plan. We continue to heavily invest in Mindanao. Last year, about 24% of our budget went to Mindanao. In 2013, this will increase further to 26%. And in terms of magnitude, in terms of absolute amount, this will even be much higher than 2012.
With sufficient fiscal space, spending on social services also accelerates.
Next year, about 5.2 million indigent households are going to be covered by the government's National Health Insurance Program. We will also ensure the poor, especially those seeking jobs, will be able to get employment because of the investments we've made in job-generating industries, particularly in the areas of agriculture and fisheries, tourism, and infrastructure projects.
As the improving environment becomes more conducive for business, more public-private partnerships are taking shape.
We've launched 2 PPP projects so far, and we have many more on stream. In fact, we will be able to launch 8 projects in 2012. What we've done is really address the issues in the processes so that we can shorten the PPP process. And this will ensure continuous bidding out of PPP projects in many areas, including mass transit, power, water, social infrastructure such as schools, and health facilities. The Philippines continues to make sure that our policies are open so that we can attract foreign investments to the country. A key effort was to open up the skies outside Metro Manila so that it would be much easier for tourists to fly into the Philippines.
President Aquino has signified his support for all the programs of the Tourism Department, including the National Tourism Development Plan, which identifies key target areas that will now be the subject of development and promotions. The key tourism development areas for the Philippines will be in the areas of beach development, like in Palawan, in Bohol, in Cebu, and of course culture and the arts in Manila, in Cavite, Batangas, North Luzon, South Luzon, and in areas in Mindanao with all the beautiful churches, forts, and archaeological sites. Now the challenge is to make sure that we have the infrastructure and the capability training to meet and even surpass our ability to meet those demands.
Still, the risks to the country's positive outlook remain.
We expect the Philippine economy to sustain its positive momentum in the second semester. However, there are considerable risks in the horizon, and these include the debt crisis and the consequent deleveraging in Europe, uncertain U.S. labor market, and the so-called fiscal cliff, which limits the room for fiscal stimulus, and the risk of a slowdown in major emerging Asian economies such as China and India.
Yet, with good planning and execution, many opportunities remain.
We are basically in control of our fiscal destiny. We have fiscal space, and this will allow us to react to any of the challenges that will be posed to us by the global economic environment.
Many opportunities remain. Growth sectors, particularly BPO and tourism, and increased government spending in infrastructure and social services will help anchor growth in 2012. Moreover, sound monetary and fiscal policies are in place to ensure a macroeconomic environment that will continue to broadly support consumer confidence and promote investment spending. In terms of monetary policy, the benign inflation outlook gives us policy space to respond to sudden changes in the global and domestic environment, if needed. We will continue to pursue the policy of a market-determined exchange rate and guard against any disruptions that could lead up to sharp fluctuations in the exchange rate. We will also carefully look at asset price trends and indications of asset bubbles forming. We will remain watchful of capital inflows that could continue in light of prolonged easy monetary policy in the advanced countries.
Under the leadership of President Aquino, the Department of Budget and Management has been leading the way towards transparent, accountable, and prudent use of public funds.
We are now just one level below investment grade. A big underpinning for that is, of course, the performance of our businesses, because that's really what drives the economy.
The direction and pace of developments and reforms is pushing the Philippines towards sustainable growth and investment grade. These clearly show good governance is good economics.